Hey, Steve Saretsky here. As always, there's a couple blog posts that go with this. This is the Vancouver real estate, I guess, market update for the May numbers. So here we are in first week of June. Basically, over the last couple days, I've been slaving away on these couple reports to get them out. I'm going away to Whistler this weekend, so I wanted to get them out to you, before the weekend, so you can sort of look at the graphs and charts and digest all the numbers. So highly encourage you, if you want to look at again everything that I reference in this video, that it's going to be on my blog, so that's going to put those links in the description below. But basically you're going to get sales over the last 10 years by month, so you can see exactly how was May doing in 2014 or 2013, and I put the 10-year average in there as well. So it's these. I mean, again, you can't get these charts anywhere, not even on the real estate board. So these are charts that I personally take the real estate board's data and then put them into my own charts and stuff. So got the average sales price out there, new listings count, all that stuff. So go and check that out. I'm going to basically talk first of all on the detached market and then shift into the condos and townhouses. But again, all these markets are three very different markets. And again, this is something that I've mentioned that maybe I don't necessarily agree with in terms of how some of these statistics are reported in these monthly reports. Not mine, obviously, but what they end up doing is they combine all three market segments into one, and then they give out one single number and they tell you, oh, it's in a seller's market, but they're actually combining all the other areas. So break it down. The detached market, first off, sales had a noticeable rebound. I think it's been trending that way over the last couple months. So I'll be obviously the first one to tell you. So someone will be like, oh, Steve, you're turning bullish on the detached market now. I'll be the first one to say when prices are falling, I'll be the first one to come out and tell you, but right now it seems like prices are definitely on the upswing. Again, you can go and check out the blog with the average sales price. The average sales price actually hit an all-time high for the Real Estate Board of Greater Vancouver in May. Now, with that being said, that doesn't actually mean that detached prices are at an all-time high. So if you're going to go buy the exact same house today versus a year ago, you're not paying as much. First of all, you're going to get a little bit more bang for your buck. Depending on each area, it's probably between 5 to 10% off the peak price. But again, it's made up a lot of ground over the last couple months. Prices are trending up, and that's because the sales to active ratio it's well above. I think it's around 25%. So that's above the threshold. That means it's a seller's market. We're seeing quite a few multiple offers. Something that I was looking at that maybe surprised me because we saw a lot of softening on the high end of the market, but Vancouver West had 188 sales last month. That was a huge rebound for them. That was almost back at last year's pace. So the detached market isn't really that far off, it seems, sort of from last year. Obviously, last year we sort of peaked in March and April, and we started that downswing. So we're not too far off the initial downswing, that seems like. So anyways, that's the big thing. I don't know if it's condos pushing up the whole entire market and it's now trickling back into the detached, but there's definitely been some picking up in the detached market. With that being said, some of it is seasonal. In June or maybe July, you'll start again to see sales trend back downwards again. You'll probably see the sales to active ratio fall, but as of right now, it's holding up. It's doing quite well. There's definitely been some price movements back on the upswing. It's made picked up some ground. And then basically switching over to the condo market, again, I think this is what's driving everything. Apartment sales for May were 41% above the 10-year average. So the 10-year average for the month of May, condo sales were 41% above that. So there was a slight, I think it was about a 5% drop year over year in condo sales, but they're still 41% above the 10-year average. So that's really what's driving the market. Again, I've talked about it. It's a lot of first-time buyers. You have a lot of local investors sort of speculating, getting into the market, leveraging that equity they built up in the single-family home, using that as down payment, buying an investment condo, leveraging these cheap rates. That's what we're seeing right now. The prices right now are just setting ridiculous highs. I mean, I've talked about this before, but you have Langley up like 33%. Surrey, Newton, Wally areas around 30%. I think Vancouver's at about 15%. But again, it starts to hit this threshold. So I think in Vancouver, the average price per square foot is just about $1,000 a foot. Of course, if you go downtown or whatever, it's higher than that. But in Vancouver, and I'm talking about Vancouver West and East combined, it's pushing close to almost $1,000 a square foot. So I guess how much more room does the condo market have? I've had some buyers call me up and say, almost speculating, saying, "Oh, should I buy this condo and try to flip it in a year?" And I said, "Well, you think you might be a little late in the cycle. If you're going to do it, you better be prepared to hold on to it." And I guess the reason for that being is, I mean, you can talk about the detached market. I think it's obviously out of touch for the majority of locals, right? So it's predicated on a lot of foreign capital coming in and propping it up. Or you have to have that existing equity already in the market. You have to have maybe bought a townhouse 10 years ago or a condo and then leverage that into the detached market. So, but for the most part, like it is right now, first-time buyers, Better Dwelling just put a report out on their site that they figured out the numbers were something like 32% of all real estate transactions right now are coming from first-time buyers. So at some point, and this is what we saw in the detached market last year, at some point the condo market hits a ceiling. There's wage growth is stagnant, and condo prices are going up 50% in 2 years, 35% year over year in some of these areas. At some point it's just gonna tap out, and it's gonna hit a ceiling. There's only so high that the condo prices can go. Obviously, can they go up higher? Right now, for sure, I think that's where it's trending. Obviously, the sales to active ratio, I think, is around 90% in majority of these areas. So it's like completely off the charts. So every sort of indication tells us that condo prices should continue to climb. Again, with that being said, I think there is a threshold, especially when you have 30% of first-time buyers into the market. I would say condos, it's got to be even more than that. Just jumping into the market again, as these condo prices continue to rise, they're going to hit that ceiling. But I don't know when that's going to happen. I think really, if people are hoping for condo prices to come down, I think because the sales to active ratio is so high, because inventory is so low. Inventory dropped 20% year over year, so it's at rock bottoms, and you have sales that are basically roughly about the same as last year. Basically, what's going to happen is, in order, I think, for prices to come down, you're almost going to have some sort of outside shock, whether that's more government intervention, a policy change. Obviously, that could happen with a new government coming in, or it's just going to be some sort of outside economic shock. Whether that comes from the States or China, or Canada's credit binge eventually just unwinds at some point. I think the only way, because the condo markets, even the detached, like I said, because these markets are so hot. And again, particularly in that condo townhouse market where you have the sales to active ratio hovering around 90%, it's hard to see. Like you'd have to see new listings and inventory like basically triple. And I think for it to triple, that takes such a long time. So I think if you're hoping for sort of prices to come down in the short run, I think it's basically going to have to come from some sort of economic shock, or again, more government intervention to start to change that mentality. So that's sort of where we're at. Townhouse market is very similar to, again, I find the townhouse market is always sort of in between the condo and the detached market. It's not as hot as the condo market. It's not as cold as I wouldn't say the detached market's cold, but it's not. It's sort of in that between. New listings are trending below the 10-year average. They've started to pick up a little bit of steam, but again, sales are still I think sales are 29% above the 10-year average. So, the townhouse market's got a lot of legs, and I think a lot of it's being pushed up from the condo market. Again, so that's just the stuff that I'm looking for. Again, it's not, I'm going to see it in the comments that, this guy is pumping up the market. You guys know I've been watching these videos for a long time. I've been the first to tell you when we're starting to see market corrections. I'll be the first to tell you when prices are coming down, when sales to active ratios are coming down, etc. But as of right now, again, all this data is on my website. Go check it out. everything is on basically the upswing. Again, part of that is seasonal, so we'll start to see some of those numbers probably taper off. I think, I'd say probably in July, it's sort of where we saw it last year. Again, that's sort of the seasonal fluctuations, year to year. You might see sales mimic May, and June sales should mimic May, that sort of thing. But we should start to see a seasonal slowdown in July, and those numbers will come down. But as of right now, the numbers, the sales to active ratios, the inventory, everything is pointing towards prices continuing to go up. Really in all market segments. And again, the condo market, I think, is just absolutely explosive right now. And again, I stress that it will hit a ceiling. I just think that, majority of people buying condos are locals. It's a lot of first-time buyers. I think at some point locals are going to say, how much sense does it make to be paying, $1,100, $1,200 a square foot for a Vancouver condo, or you're pushing into Richmond where it starts to get upwards of $700, $800, and eventually that's gonna hit a ceiling, like it did with the detached market. It's sort of people to say, well, and they step away. Like I've had a lot of buyers myself that have just been, they've lost a couple multiple offers, prices are going up. They say, screw this, I'm out of here. It's too high. I'll take a break. So I think that we could reach that point, but essentially, the condo market, again, the sales to active ratio, I think for this month was just over 90%. It actually beat last year's high. So, I don't know when it's going to slow down, but, I think for prices to come down, it might have to come from some sort of outside shock or whatever, but that's the update I got for you in the May numbers. Again, I highly encourage you to go to my blogs, check out this work. If you want like that, I also do a weekly recap of all the news. I gather all my sources, data, put it all in together to a newsletter. So if you want to join that, I got a couple thousand people on there. And I think that's really one of my most popular channels. I think a lot of investment guys on there, etc. So I basically just curate the news and put it all together for you in a very easy to digest format every single week on Monday morning. So I highly encourage you to check that out. I'll put a link to that as well in the description. So anyways, hope that helped. Enjoy your weekend. I actually want to hear your comments in the comment section below. If you have any questions on the market in certain areas, I obviously can't touch on every single area. I'll put that in the description below. And another way to engage, probably my most active channel is Twitter. So go on Twitter. I love Twitter. I think it's the best. I think it's the best social channel for curating financial news. So like, I have some issues with sort of like the mainstream in terms of like what they'll put out. I think that they censor a lot of it coming in. So I like Twitter because you're actually able to go in and follow like, I follow hedge fund managers on there. Very well-respected economists, Steve, because I'll talk to Steve Keen on there, that sort of thing. So I really like Twitter because I'm basically able to curate all my financial news, whether, you want to get the real digs on, like, the U.S. economy, all that stuff. Look, you can look at the U.S. 10-year Treasury is dropping. Everyone kept talking about how interest rates were going to go up. Again, if you want to look at Canadian 5-year mortgage rates, they're actually going down. And that is, again, predicated on, if you watch the U.S. 10-year Treasury, that's tied to the 5-year government bond, and the 5-year government bond's tied to our 5-year fixed. So, you just watch all this stuff. All these markets are interconnected, right? So I like to curate all my news on Twitter. I highly recommend it to you. And then, of course, it's the easiest way to engage with me on there. I'm very active, but... So give me a follow on Twitter at Steve Saretsky, or feel free to post in these comments, hit subscribe, do your thing, and you can check out the description below for all those blog posts. All right, have a good weekend. See ya.